Let me tell you a little story about two guys that we all know. These are individuals that were both doing very well heading into 2008. And we'll just, for the sake of this story, call them Mike and Dave. Now, Mike was the guy that everybody noticed. He had the infectious energy. He had the big personality. He had the nice car in the driveway, the big house in the right neighborhood. He was always at the right events, always looking the part. And when the market was good, Mike was very loud about it. He lets you know he was having big success. His portfolio was growing, his lifestyle was growing right alongside it. And honestly, people respected him for that. He looked the part and he just dripped success. Now, Dave was a little different, a little more reserved, a little quieter, a little more unassuming. He drove something very practical. He lived below his means even when he didn't have to. And if you didn't know what Dave was building behind the scenes, outside looking in, you might have actually felt a little sorry for Dave. And he was one of those individuals, he just didn't flash it. Well, both of those guys going into 2008 got hit. And here's where the story gets real, because there's a lesson in this based on maybe a season that I think we're heading into right now, or I can guarantee you we will be heading into at some point in the future. Now, Mike, he saw all the warning signs. He saw the same warning signs that Dave saw. But Mike couldn't act on those warning signs. Why? Because acting meant that he'd have to sell those assets, downgrade that car. He'd have to get rid of that house, all the things that he'd been bragging about. It meant downsizing his identity that he was wrapped up in. It meant admitting to his network, to his clients, to his neighbors, to himself, that things just weren't what he said they were. Things had changed. His ego wouldn't let him make that move, so he froze. And then he started to bridge, to buy himself a little bit more time, to hold on, to scrap and claw at what once was, hoping it would be what is going forward. Then he eventually borrowed. And by the time that he was forced to make the moves that he should have made in month 3, it was now month 18 and barely keeping himself above water. The damage was already done and bankruptcy set in. It all came crumbling down. Now, Dave, on the other hand, he saw the writing on the wall. And Dave not only moved into action on month 1, he did it in week 1. He went and divested out of certain properties. He cut his overhead. He downsized his team. He got liquid. He built a moat and played defense in the areas of his life that he knew he needed to in order to make sure that he wasn't going to go down with the ship. Now, it wasn't fun. It wasn't pretty. But for a while, he looked like the one who was struggling when in reality, it was really Mike. Dave was ultimately the guy who ended up cleaning house and buying up all the opportunities that people like Mike were forced to sell at a fraction of the price and the pennies of the dollar that ultimately they once were. Now, these are two individuals that went through the same market, they went through the same crisis, and they had two completely different outcomes. And the difference wasn't intelligence. The difference wasn't their connections or their skills. It wasn't even timing. The difference was ego. And that's what we're going to be talking about in today's episode. Let's dive in. What's going on, guys? Welcome back to another Friday Food for Thought. This episode is a little different, being that we're going deep on something that I've seen destroy so many wealthy and successful people. It's destroyed more wealth than bad deals and bad markets combined. And we all know who these individuals are. And the two individuals that I talked about at the intro and beginning of this episode are two individuals that are representative of personality types and people across all different industries in society, in sports, in business, in marriages. And ego ultimately is one of those secret and silent killers that I think are always important. I believe in having healthy levels of ego, right? We all have them. If you don't, you're lying to yourself. And that being said, right, it's extremely important to have awareness around this and leverage it in a way that serves you and be aware of it in a way that it doesn't hinder you. And today, I came into my career in real estate investing right after the financial crisis in 2010. The wreckage was everywhere. I was just moving back from college, and I saw when I went and interned for the guy that ultimately gave me my first opportunity in real estate, working for him for 12 months for free. There were foreclosures everywhere post-financial crisis, a lot of distressed properties, and these were people who, a lot of them, had been worth millions on paper that had completely evaporated. Entire portfolios crumbling to the ground. Now, not all of them, right? But a lot of people got impacted, and a lot of these stories were very prevalent during that time. And I was really looking to take notes. That was my first exposure to a financial crisis that really impacted the economy and impacted a lot of people in a very big way. And I was young, so at that point, I knew that I needed to be a student. I needed to ask questions, stay curious, and observe and learn from other people's mistakes. So I was watching and learning. I was asking a lot of questions, and I was paying attention to the people who crashed and burned during that time. And I was also paying attention to the people who weathered the storm and not only survived, but most importantly, who actually thrived coming out on the other side. And here's what I found: it wasn't the smartest people who made it through. It wasn't always the ones with the most capital. It wasn't the ones with the best relationships. It was the ones who could do something that sounds simple, but is incredibly hard. They checked their egos at the door. And that is one of the hardest things for people who are confident and convicted and successful at many stages of their life to do. The investors who survived, and I mean really came out stronger, they were willing to do whatever the situation required. If that meant downsizing, they downsized. If it meant selling assets they were emotionally attached to, that they built, that they had a ton of money in, that they had other investors' money in, guess what? They sold them. If it meant cutting personal expenses, cutting business overhead, letting go of the image that they had spent years building, they did it. And they did it without hesitation. They did it with humility, honestly. And they never stopped playing offense at the same time. And that's the part that I think a lot of people miss. They didn't curl up in a corner and wait for the storm to pass. They shifted what offense looked like. They got lean, they stayed liquid, they kept their eyes open. And when the market turned, they were ready to get back on the offensive and move while everybody else was still licking their wounds. And meanwhile, the ones who crashed and burned and really got hit during that time, a lot of them saw the same warning signs as the individuals who ended up having great success. They just couldn't act on them because acting meant admitting something they weren't willing to accept or admit during that time. And as I reflected on that, I was thinking just how easy and simple it is to do what was required, and yet how challenging and hard and heavy the ego makes it to do some of those things. That they needed to change their strategy and they didn't. That the market had changed and they didn't adapt accordingly. That they ultimately were called to do something that they easily could have done and decided not to, not physically because they couldn't, but mentally and emotionally because they couldn't. And the reminder that the simplest things in life are oftentimes the hardest things to do. And yet, the emotional things that many human beings do ultimately end up leading to our biggest downfalls. The most powerful, the most strong, the most capable, oftentimes their downfall is because of their ego. Their ego wrote checks that their balance sheet just couldn't cash. So let me say something that, maybe might sting a little bit, but maybe it's something that somebody or you need to hear. Most people who look wealthy are actually not wealthy. That's something that I've learned. I interviewed Morgan Housel, who wrote The Psychology of Money, a great finance book, one of the best ones, in my opinion, over the last decade. And one of the things that he said, he put it like this: spending money to show people how much money you have is the fastest way to have less money. Let me say that one more time. Spending money to show people how much money you have is the fastest way to have less money. Now, we all know that person that has the money can spend it. They want to show it. They're big egos. Those people are, in this circumstance, in my opinion, outliers, whereas most are not. And he then takes it further and he says that wealth is actually hidden. It's the money you didn't spend, it's options, it's flexibility, it's freedom. That is what's invisible, and that's exactly the point. And that really resonated with me. The person driving the leased Range Rover to keep up the appearances after their income dropped, that's honestly a perfect example of ego making financial decisions. And ego is a terrible chief financial officer for anybody. I don't care who it is. Now, if you're familiar with billionaire Arthur Hayes, who's a crypto investor, he's a macro markets kind of guy. He said something recently that hit me as well in an interview. I'll link it up in the blog article on millionairemindcast.com. Um, One of the things that he was talking about was high earners who suddenly lose their big salaries. They were talking about AI and the change of culture of technology with AI, and really how a lot of white collar people are going to get hit. And obviously, just the overall job landscape is changing. It's going through a major transition right now. And if you're not preparing, if you're not thinking about how this is going to impact you or how you can retool and tweak and adjust accordingly to get the outcome and the desires that you have for your goals, your career, your income, whatever it may be. Um, One of the things that he said, was how high income earners who suddenly lose their big salaries, he said maintaining their previous lifestyle while the income is gone is a bottomless pit, and ultimately is going to lead them to despair and depression and honestly really hard times financially if they don't do something, not only like when it happens, but even thinking about what if it does happen, you do right now. And that the only real path out is to act decisively, to cut the costs, to sell the real estate, to downsize the lifestyle, and to do it early. Do it before you're actually forced to do it. Because when you're forced to do it, it's already too late. Waiting is ultimately and getting into that position is one of the worst places you can be. And you're going to be doing things that you could have avoided having to do, or maybe to do at that level, that if you would have done it earlier would have prevented those things. And that's the most expensive version of the decision. And he's right, right? And it applies way beyond, cryptocurrency or your career. The psychological trap that I think a lot of people fall into, that I see, especially in this wild world of social media that we live in today, where all of your life has been posted and, there's a track record and there's, a bunch of boxes on your threads that you can scroll down over years and see the image that you have portrayed to the world. And unfortunately for a lot of people, I think we've seen this, right? Many personal brands have come and gone because those people were essentially facades. They were a mask, they were a house of cards. And, the fear that people have of being perceived as less successful than others or than what they portray to others drives people to make insane decisions, especially when it comes to their finances. You know, it really, in my opinion, they're justifying prioritizing outward appearances over actual financial stability. And social media obviously has turbocharged this, providing that constant window and exposure into people's worlds. And oftentimes, right, these are curated lives and images of success that are really like unrealistic benchmarks that people ultimately go into debt for, to chase these things, or just aren't sustainable. And, talking about the Mike, right? The guy from the opening of the story that we all know, he wasn't a bad investor. He wasn't a bad person. He was a guy that was obviously confused by his image and that was ultimately his identity, and it had to stay that way. And when the market forced him to choose between protecting one versus maybe protecting the other, he just chose the wrong one. And that's just being human. You're not competing with your Instagram feed. You're competing with your future self. You're competing with the freedom that you've worked so hard to have. And sometimes that requires you to take a step back, to retool some things. The people that are liking your posts, the people that are, seeing you at business events, the people that are your neighbors or at the local, golf club that you go to, those motherfuckers aren't paying your bills. They're not taking care of your kids. They're not making sure that you're healthy, happy, and safe. And at the end of the day, they don't really give a shit, to be totally honest. They might say something in the short term, and if you get wrapped up in those comments or those thoughts or those things happening in your world, and you're willing to make and sacrifice the safety and security of your future and the freedom and all the hard things that you've worked for, I would encourage you to really take a step back and take a long look in the mirror and recalibrate what's really important to you. And the reason why I'm bringing this up is because I know some people that are going through this right now, and they are continuing to put this facade on when I know that everything is crumbling behind the scenes. So I'm really preaching and sharing this particular message for a few people because I care about these people. Um, and they need to hear this, and I've said this to them, but I also know that there's a lot more people like them out there that I hope it will encourage them to make the necessary moves they need to make before it's too late, because I've seen a few of these people previously repeat this cycle. They've already been bankrupt in the past. So here's where I want to be really clear, because I don't want this episode to be misread. Checking your ego and shifting to defense, that's not called giving up. It's not losing. It's not waving the white flag. It's not retreating. It actually is, in my opinion, winning intelligently and strategically for the long term. Just because you go down 3-1 in a soccer game, until the game is over, you're still in the game. But if you get completely knocked out of the game before the game is over, well, guess what? You're done. And that's ultimately what we want to prevent. So Dave didn't stop playing the game in 2008. He changed how he played it. He looked at the board. He saw what was real. He made the uncomfortable moves early, and he stayed in a position to strike when the time came. That's not a retreat. That was just a strategy shift. One CFO who lived through the 2008 financial collapse, he said it plainly: don't panic and get your house in order. Collect receivables, send out your bills, pay your bills, make sure that day-to-day functionality of your business is working. Those are the things that you can anchor to. That's not glamorous advice. It's really honestly simple advice, but that's what survival looks like when shit hits the fan. And survival is what lets you play the game long term. And that's what we want to make sure we're able to do, especially in seasons like this of uncertainty, of fear, of turbulence, of challenges. There's a lot of headwinds, in the world right now. And I can sense, I even feel some of that fear, doubt, and uncertainty in certain things that I'm doing, right? And so David, Pat Bet David says this well, right? Like, to have a healthy level of paranoia is not a way of thinking in a scarcity mindset. It's actually playing offense and defense simultaneously. So, where this CFO mentioned he saw it go wrong for people was when they assumed the pain was going to be short term and put in short-term fixes, right? Bridge financing or rollover debt, or I'll just borrow a little bit of money over here and put it over here, and I'll replace that back here soon enough because it won't be that long that it's gone. Those are the things that get people in major trouble, and one domino leads to taking out all of the dominoes. But when the economy stays bad for long periods of time, or at least longer than expected, right, they were right back in crisis mode. Only now they're in a much worse position with a lot fewer options. And that's what we want to avoid. That's what ego does. Ego says this is temporary. I just need a bridge. Discipline says I need to restructure, not bridge. I need to do this now. Warren Buffett's been saying this for decades. Be fearful when others are greedy. Be greedy when others are fearful. It's a very simple line, right? I mean, it's almost become cliche now, and yet it's true as it could ever be, but only works if you've done the work to be able to be greedy when others are fearful. So that way you can actually buy the dip. But if you're over leveraged or you're underwater or you're cash poor, you don't have any banking relationships or you don't have anybody in your corner and you're starting from the ashes and the rubble, it's going to take a whole lot longer to get back to where you were at, let alone if you're in a position where you can do those things. This is where you can take exponential steps and compounding growth in ways that you wouldn't be able to do on the alternative. The long game only works if you're still in the game. So one more thing I'm going to address real quick. And this one is personal for me. There's a version of ego that doesn't show up as flashy spending or lifestyle inflation. It shows up as stubbornness. I'm a stubborn motherfucker. I'm a Taurus, all right? Bulls are stubborn. And I know a lot of you are probably stubborn too. That's where a lot of success comes from. But as the refusal to pivot because pivoting feels like admitting you were wrong, you got to avoid that level of stubbornness. I've seen so many investors hold bad deals way too long because selling at a loss felt like failure. I've seen way too many people stay in markets that stopped working for them because changing course felt like giving up. Behavioral finance research, if you haven't done any research on that, go and kind of look it up. It shows that intelligent, successful people are actually more likely to hold losing investments too long because selling at a loss feels like admitting a mistake. Think about that. Like, our egos don't allow us to admit a mistake, and we put ourselves in financial harm because of that. Their ego cannot accept that the original analysis was wrong. And I've been there. I'll just admit it. I've done it on a couple flips before, right? When I could have gotten out, I had an off ramp, I had an exit, I could have done things, and I held on for too long. And guess what? It came back to bite me in the butt. Now, fortunately, it wasn't anything catastrophic, but this is the thing that you want to avoid. And you can't avoid if you're aware of the ego trap, because that's ultimately what it is. And it's the most dangerous version because it doesn't look like arrogance from the outside. It looks like conviction. I'm convicted. I'm going to see this through. I've been there. I've done that. It looks like loyalty to a plan, but underneath, it's really just the same thing. It's an unwillingness to let reality be more important than your story about what reality actually is. And the best investors I know, the ones playing real long-term gains, that when seasons like this come up, they absolutely crush it and take 10 steps forward instead of 2 steps or 5 steps or a lot of steps back. They don't need to be right. They just want to win. And those are different things. Being right is about ego. Winning is about outcomes and discipline. And Morgan Housel nailed it with this quote. I'll leave you with this. Embracing the idea that financial goals made when you are a different person should be abandoned without mercy versus put on life support and dragged on is a good strategy to minimize future regret. Regret. Read that again. Let me read that again. Abandoned without mercy. Not lovingly let go, not gradually phased out, without mercy. Cold cut, clean and dry. Because the cost of clinging to a strategy that no longer serves you is paid in time, money, and opportunity. And honestly, a lot of mental health and stress and all the other shit that goes along with it. So don't be afraid to shift your strategy. And in times like right now, right, you have to. Whether it's in real estate, whether it's in your business with AI, whether it's in your marriage, I don't know. In any aspect of life or business, when it's called for, you got to do it. And what we know right now, and what we've noticed over the last few years, and what is happening, at least in my opinion, going forward, the market has shifted and it is shifting. And your plan needs to shift too. And that's not weakness, that's wisdom. So, as we wrap this episode up, I think to sum it up, the play is you got to stay alive, you got to stay liquid, you got to stay humble, and you got to be ready. Because here's the truth. The people who are quietly getting lean right now, and I know a lot of really smart, wealthy people that are getting lean right now. I know a lot of banks. I know a lot of investors. I know a lot of businesses that are quietly getting lean right now. They are quietly restructuring. They are quietly letting the data drive what their next move is or how they shift in the next strategy. They are quietly shoring up their positions. They are going to look like geniuses in the next few years. And the people who kept up the appearances, they're going to wonder what happened. So check your ego, protect the long game. That's it. If this hit home, I, would recommend sharing it with somebody that you think this might resonate with. Send to one person in your network who needs to hear it right now. Send it to a family member. Listen to this yourself if you need something to get driven home. But that's how we grow, right? Is to, check our ego at the door, make sure we remain humble, and put in the work. See you guys in the next episode. Cheers. Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.